Welcome back. The Shapoorji Pallonji Group's Afcon Infrastructure IPO is opening today. The company plans to raise about 5,430 crore rupees. The IPO proceeds will be largely used for working capital requirements and prepayment of borrowings. We have Mr. Subramanian Krishnamurthy, Executive Vice Chairman, and Mr. Paramasivan Srinivasan, MD at Afcon's Infrastructure. They're both with us here in our studios. Gentlemen, great to have both of you here. Thank you very much. If we can start with you, sir. Give us a sense of, once this IPO is done, what will be the leverage at the company? What are debt levels now? And post this is done, the IPO is done and the proceeds come in, what will debt levels look like?
As at 31st March 24, we were at about 2,400 crores gross debt and a net debt of sub 1,800 crores. And we do expect to post this issue, we will be sub 0.5% of debt equity.
In absolute terms, what would that mean, sir? In terms of a net debt number, from net debt at 1,800 comes down to?
Our stated objective is to repay working capital loans to the tune of 600 crores.
Okay, so
as a part of this.
Ballpark 1,200 crores?
1,200 crores.
And the borrowing cost would be around 10%?
9.4%.
9.4%. So approximately you'll be saving roughly 55 to 60 crores of interest cost.
Right.
Okay. Also, sir, let's talk about the business itself, the order book and the growth prospects that you're looking at. I think the order book is somewhere around 32,000 crores, give and take right now. And it's spread across a lot of different verticals. Obviously, urban infrastructure is a big segment for you as well. What is the order book growth that you're looking at over not just this year, next 1-2 years? Just give us a sense on the business and which are the segments that you're most bullish on.
No, overall as a company, I must say we have seen a good growth over a longer periods of time. And we also look forward to a consistent growth. And the current year, we have already bagged significant jobs. And if we take including L1, we have bagged very significant jobs over the last few years and in the current financial year. And we look forward to maintain our tempo both in the domestic and international markets. Going forward.
Currently, you would be, so 32,000 crores is what you've already bagged. Currently, what is the quantum in which you're L1, the number of orders in which you're L1?
The current year, whatever we have booked, including L1s, is to the tune of 19,500 crores. That is from 30,000, closer to 31,000 at the beginning of the year. From there, we have bagged close to 19,500, including L1.
And can you just give us the split between how much you've already backed and how much would be the L1?
Out of roughly 8,000 crores, we are L1. About 11,500 crores, we have already backed.
And these are orders coming across from sort of what are the, again, just some color in terms of the verticals, the segments?
It has, practically it is there everywhere. Okay. In marine, urban infrastructure and hydro and underground. These are the three major segments. We have bagged jobs.
And you briefly mentioned domestic and export. So what is the current mix? Which one is growing faster? And is there a margin difference? If yes, what is it?
Typically, we have been maintaining, we are a government recognized 5-star export house. And typically, we have been having about 70-30 domestic, international. But current order book is slightly skewed towards India. It's about 76-24 at this point of time.
Margin difference?
And in terms of margin, our international business typically earn 200 to 300 basis points higher.
Okay. Mr. Subramanian, what would be steady state margins, EBITDA margins at Afcons? What should we expect? And what is the room for improvement?
We have achieved 11.6%. We hope to maintain that.
Maintain that? Is there any scope for improvement? And what can you do to improve margins from here?
No, we have various systems in the company, risk management framework, we have knowledge management systems, and our operational model is very well known. So these things should help us to maintain and improve upon our margins, but we are saying that we would maintain it at the least.
Mr. Paramasivan, you said international orders get you 200 to 300 basis points, higher margins.
Yes.
And what's the split between the work that you do, domestic and...
Typically 70-30, but currently the pending order book is 76-24.
Okay.
That's local, international, 76?
Yes, domestic is, last few years we have maintained 70% domestic and 30% international. The current pending order book, if you look at it, it is 76 and 24.
Sir, highways and roads is also a big segment for you, right? And we've seen a lot of slowdown, at least in the NHAI activity, in terms of just the awards. First, we thought it's probably election, or but now even post-election, there's not been a significant pickup. What is the percentage domestic, highways and road contracts. And is that a concern at all, the slowdown in the NHAI activity?
No, something which we had really anticipated the slowdown because there have been a lot of spend over a period of last more than 2.5 decades on the road sector development. So the shift has happened from that of roads to that of railways. And also there are last 10 years we found there have been no award of jobs in the hydro segment, and those things are getting awarded now.
Hydro and underground, which is your
Hydro.
largest segment. It's at, I think, almost 27, 28%. One of the biggest segments
Biggest,
for you.
second big segment for us.
for you.
Biggest is urban infra, second big is hydro and underground.
And margins, just to understand conceptually, between these two large segments, where do you get the best margins between urban infra and, say, hydro and underground?
I would put it in terms of margins, we do get decent margins in hydro and underground, and in urban infrastructure and underground metro. And the marine business is something where we are special.
So you want to split it up for us?
In terms of regulatory guidelines, you know pretty well, we can't express some of these things.
No, but we see you. We see the AFCON's board at so many places in Mumbai. So yes, you're
we just
you're
want to
pretty big here.
in every segment, what is the margin difference? Because then going ahead, and it's perfectly in line with the regulations, what you are doing as of now, what is the margin difference between segments, if you could quantify it? Like how you gave us for exports and domestic.
I would put it varies between 900 to 1200, 1300 basis points, between 9% to 12, 13%.
That's the, okay.
That's
With
a
projects like
general
urban
overall
metro fetching among,
So the
I'm
lowest,
guessing the highest.
between the lowest and the highest, about 300 to 400 basis point
Yes.
difference. That's the variance. We'll leave it there, gentlemen. Thank you very much for joining us, Mr. Paramasivan, Mr. Subramanian.
Thank you.
And we'll, of course, we'll look forward to having you back with us, and we can probably talk more specific numbers as well. Good luck with the
Thank you.
issuance.
Thank you very much.
Thank you.
Thank you.
Thank you.
I think we're running into